them. So nothing has changed. What has changed is who is having the inventories consumed. And naturally, this causes a major market reaction. So what we witnessed on Friday with the massive drop in crude oil prices is people know something, right? So they are resetting their positions to make sure they don't get caught in the downdraft as the governments make further announcements, and they will release some oil. So it's down until it's up again, because we are just entering the winter. There is normally a surge in demand in that time. And also we are entering the Christmas period, which happens to be a great holiday and everybody wants to fly. And you saw in ADIPEC, as you were mentioning, the thousands of people that attended. And I had friends that flew from everywhere to go there. So in a previous meeting with you guys, I used the term cage animals wanting to be released. That also hasn't changed. In fact, it's steepening. So what we are seeing here is really a change on who has the inventories reduced. But the oil market remains extremely healthy. Typically, we see these downdrafts in November, and then the markets recovered in December and January. That's really the high-level point of view of what is going on right now.
So it's a bit of a pause. Christoph Ruhl, Senior Research Scholar, Center on Global Energy Policy, Columbia University. By the looks of that balcony, it tells me you're not back in the Black Forest of Germany. Christoph, I saw a great headline over the weekend in the New York Times, so I'm going to steal it. And it was, "The world economy is great, so why do we feel terrible about it?" Your thoughts on that sentiment at this time? Every figure, macro number looks like it's going in the right direction, inflation aside perhaps, but nonetheless, the world economy is doing great. Why do we feel so bad about it? Your thoughts?
So you want to avoid me commenting on Jose's oil market take?
No, come back to it, certainly.
We come back to it later. On the global economy, maybe because the first part, the economy is doing great, is not quite true, or is likely what we previously described as a flash in the pan. So we have seen the pent-up demand from the COVID cage, as Jose puts it, to explode a little bit. But the global economy, I would disagree, is not in great shape, and especially what is more important, its outlook looks not very positive, and that's what determines people's sentiment. They don't look at what was yesterday; they look at what will be tomorrow. Why is the outlook not that great? Number one, as we have now been mentioning and discussing for months, because something fishy is happening in China, and it's not looking very good. From whichever angle we look at it, from the financial sector stability angle, the inflation angle, in particular, where it all comes together, the growth angle, this is going to be a 5-point-something growing economy, not anything higher than that. And this is good by all normal standards, but not by the past 30, 40 years in China. Number two, the inflation numbers you mentioned. We are seeing now sort of things drifting apart already. We see in the Federal Reserve orbit more and more people coming out and saying, maybe we should taper a little earlier, maybe we should be a bit more aggressive. And meanwhile, in Europe, the ECB putting water onto the flame, so to speak, and saying, oh, no, we will not start tightening up monetary policy because we don't think we can afford it. And if you then look behind that statement, it's of course true, because Europe has a double problem, slower growth than in the US, and a resurgence of COVID numbers in the center of the country. So that's number two. And then this research of COVID, which is a little bit everywhere, is another little ingredient which probably has people more worried, although I think this will go away, and by 22 we are finally over that. But the ultimate question is always that one. We had this big collapse in 2020. We will have a recovery, but what will happen next? Will we be back on the same sort of global growth rate as before 2020, or will there be, like in previous recessions, a slower long-term growth rate, the result of all these misallocations? And it starts to look decidedly more than the latter, and that's bad news for everyone in a situation where the instruments of economic policy making have been more or less exhausted.
Jorge, I wanted to get your views on OPEC Plus resistance from their biggest customers and partners, China, the US, Japan, India, ignoring their calls for more oil. And now, as a result, we're getting this distortion into the market of strategic petroleum reserve releases. Your thoughts on that strategy by OPEC Plus? Is it wise? Is it not? Where do you think it goes?
Well, when you have a good that you are happy to produce and others are not so happy to produce, I think you can name your price. And OPEC, I think, is playing it very well in optimizing the value of the commodities they sell. They have done a remarkable job in doing that. And what we have seen, and COP26 was a very good example of that, is that the Western economies are not so keen at the high PM or presidential level in really restoring production or encouraging production. So OPEC is on the driver's seat and will continue to be on the driver's seat. SPR releases, which are a reaction by those governments that are fearful of high prices, will have an impact and have had an impact on prices. But nobody feels rich by consuming what you have stored in the fridge. You are actually becoming poorer by the day when you're not producing milk, but you keep on drinking the milk from the fridge, right? Or you are not willing to buy any. So I think for OPEC, they're very much in the driver's seat. They have a few months to observe and continue to observe the impact of those realities. And what we have seen in the past occasions is after there is an SPR release, the price continues to go the way it should go, because those measures are by definition temporary and ineffectual, actually.
Christoph, your thoughts on that same question and the commentary that you wanted to jump in earlier on the sort of price structure we're now with Brent below $80 for the first time in a while?
Yeah, I think there's a lot of perceptions that need to be corrected. Number one, I don't understand the US petroleum policy, and I don't think they actually have a coherent policy. I think this is hilariously off the mark what they're doing now. There was no need for an SPR release. I mean, so far it's only talk. Maybe they think they can sweet talk the market. Because contrary to what Jose is assuming, we have seen prices already settling in and stabilizing, not moving for a while. And the key thing here is that this is a politically motivated price because of OPEC cuts. The existing spare capacity is still way higher than the expected demand increase for 2022. And in fact, what we are now seeing is that demand in next year will be much lower than expected by many people, and will be much closer to what I and others have sort of argued for a while, that the savings of oil over 2 years will be there even if COVID was there. So with the global economy back at 2019 levels, global oil demand corresponding to that output will be 4.3 million barrels lower. And the IEA estimates now point that way. Number two, even if you have a SPR, here I agree with Jose, SPR release by definition is sort of changing the buck and not very helpful in the long term. But also what it does is it prevents supply from coming forward, right? Because it cools down prices temporarily. So that means it takes away the carrot from all these private producers to produce more. Goldman Sachs, who has been very bullish on the oil market all along, sort of wrote a long note wringing their hands on this strange US policy, saying if they really do this, all they're going to do is to take away the incentives for producers to produce more, and trying to invalidate the old adage, the cure of high prices. They just prolong the thing. And that's absolutely correct. So it makes no sense at all. To me, this whole policy of first, reining in domestic producers, saying you can't have access and you have to be constrained, and riding this wave of climate change turning it into supply cuts, and then turning to OPEC and asking them for more production. And now trying to go around the globe, finding alleys for an SPR release, which under the cover of darkness has been long done in China, and which Japan, says, yes, we will, because they have to be on their best behavior right now, given the tube. That all is not a coherent policy. And I try to explain it. I talk to people about it. Where they come out is ultimately to say that the Biden administration, coherent as it looked at the beginning in the energy space, is surrounded by people who know a lot about climate, but very little about oil and gas.
Jorge, we've seen some talk, and we have an article in our digest today about hedging, and the fact that many producers in the US and elsewhere are not enjoying this surge in price because they hedged their position for 2021 and are now backing away from hedging for 2022. I'm just wondering, from your perspective, what impact that's having on the market, on new supply, and what could it have next year?
Yeah, that has been an interesting. There has been an interesting series of announcements by producers that they won't be hedging going forward. And having worked for oil companies in the past, I know it's a very deep discussion internally. Are we an oil producer that wants to tell the shareholder that we are exposed to price, or do we want to tell the shareholder that we manage the price and hedge and lock in a profit? And some companies go one way, some companies go another. Essentially, what happens is, if the market goes up to a producer that hedges, it's very costly for them, because they need to start topping up the margin accounts in the futures or the banks that are holding those positions, or they need to do very complicated option plays, which also cost money. And it is clear from where we are right now that prices are plus or minus $80. I don't think anybody who is sensible is thinking that it's going to go to 50 or something like that. And nobody is thinking in the short term that it's going to go to 150, right? So what we are looking at is a range where the winter and the economic activity will define the upper end, and the SPR releases the lower end, which, as we are discussing here, are temporary in nature. So what we're talking about is 80 plus or minus. And in that circumstance, it is more efficient from a capital consumption point of view for a company not to hedge and ride the prices and hope for the best. Strangely, Christoph and I are sort of agreeing in all the major points we are making this morning, and I really don't want to speak on his behalf. But one thing I maybe disagree a little bit is, I think the economy is very good, because to me, as it's personally, the way I see it is, an economy is good if production is going up, and production globally is going up. And this means that you need to consume inputs. And one of those inputs is metals or energy or all these things. And therefore, if I were in a company, I would also advise not to hedge, just ride it. Good things will come out of it.
Ride the wave. Christoph, touching on the other big story over the weekend, at the end of last week, Austria, I think the first European country to go back into lockdown and to announce a mandate that vaccinations are compulsory for everybody. Not quite sure how they're going to do that, but nonetheless, Holland, we saw as well, Germany, infection rates are getting quite high. How does the sum of all this, where is it going, and what is its impact on energy demand, do you think?
I think this is just the bell which we certify the end of the pandemic as we used to know it. I mean, COVID will be around with humans and with animals. But what you're seeing here are countries which, for various very interesting reasons, have a strong share of people who refuse to vaccinate. Funnily, with the exception of Holland, it's concentrated on the mountainous regions in Central Europe, which is also known for having a history of very small states, very sort of independent structures, are now all part of larger country federations. But you think of the history of Switzerland, Austria, Germany, these are very strong little fiefdoms there where people have their own language areas, their own thinking, and some sort of distance to central regulation and government. So anyway, I don't want to drift apart from that. What we are seeing now on both sides in a twisted sort of way is that the majority in these countries agrees that vaccination is the way out. And then, of course, there's now the conflict. What do you do with the minority? But at the end of that conflict, or by the time spring comes, there will be no doubt that if there is no super mutation, as somewhere coming from somewhere in the third world, that everybody needs to get vaccinated, and who isn't will bear the risk. And that will be the end of the COVID lockdowns and of the economically very harmful way initially we had to deal with COVID. So I see this, it's funny because I read, of course, German newspapers, and they're all full and up in arms. And how could this happen? And how could we overlook the fourth wave? And what do we do? And da, da, da. But then you go and you see the incidence rate indeed twice as high as it was on the deepest day in 2020, the blackest day in 2020. But the rate of hospitalization twice as low, and the death rate very, very minuscule. And that's, of course, reflecting that most of the people who are vaccinated don't get seriously sick. That's such an obvious and simple truth. It will sink in, and it will just certify that even stubborn people in the Central European area will come to recognize what the Spanish and the Dutch and and the Portuguese and others have long recognized, and the same for the US.
Jorge, I wanted to get your thoughts on the other story we're carrying on the digest today, which is Asian buyers can't get enough of US sweet crude oil, up to nearly 4 million barrels in October. There seems the Asian refiners are preferring, or at least seeking out, that sweet crude and trying to minimize their exposure to sour. Your thoughts on this?
Yeah, I don't think this has anything to do specifically with a country itself.
Mm-hmm.
It's just the qualities of the oil that the consuming countries need to refine to match customers' requirements. As we head into the winter again and flights start to resume, you have the additional boost in demand for diesel and jet fuel. And you have the ongoing recovery in gasoline. So by definition, the inputs that you need into your refinery are the lighter crudes. It makes more sense from a refining point of view. And that's what the countries are doing. So they're buying light crude oil. It could be Brent, it could be TI, it could be related to those markets, but it's essentially the upper sector of the light crude oil. So I don't think there's anything unusual there. It's just a reaction to refined product prices.
Let's go to the room on the survey question that I started out our conversation with, which is the world economy is good, so why do we feel terrible about it? One, inflation trumps the pay rise. So even if you're getting pay rises or you're back to work or whatever, inflation is trumping it. COVID, I'm back, as a famous Austrian once said. FOMO, fear of missing out. You never bought Bitcoin, so no matter how much pay rise you get, you're just bummed. And everything looks fragile. So just some of the thoughts, some of the things to pick, some of the things to think about. Why do we feel terrible even though the world economy seems to be good? I mean, the data is good. So welcome your thoughts on that. And we will go to thinking a little bit about next week. Christoph, before we think about next week, I just wanted to get your thoughts on last week. ADIPEC, not to be too much in our own wheelhouse, is it meaningful? Just as a large, huge gathering of business people, did it have? What are your thoughts, takeaways from it?
I think it was very meaningful. I was thinking about this actually. So, what would be my thoughts or takeaways from it? Probably three. So, number one, I saw a very strong reaction to the COP26 meeting, and to the fact that at this meeting, the oil and gas companies, basically, if they were present at all, and a few hundred of them were down there on an individual capacity in order to talk ESG and whatever, or greenwashing. There was no organized participation, and that was mentioned several times. It failed. So I think one of the first takeaway was that people are now in the oil and gas industry, for the first time I saw that, got seriously worried about this massive attempt of cutting into supply and production opportunities, right? So they felt the heat sort of coming closer. And it wasn't only talk about something like carbon prices, it was like talking concrete about access restrictions and about just massive public opinion supporting that. And as a result, it became a lot more tangible to accept and practical to accept something like a carbon price. So that's my first takeaway. For the first time, I saw a lot of oil and gas representatives saying, okay, give us a carbon price any day. We can deal with that. We have been through price cycles back and forth. But stop this, not giving us access and threatening our sort of volumes of production on the side of the business, on that side, the volume side of the business model. That would be number one. Number two, and perhaps more obvious, is there have been some strong reactions now to what is labeled the energy crisis, the high prices in oil and gas, in particular in gas. And so now the first voices are being raised saying you cannot do the energy transition in this blue-eyed, hilarious fashion, which is sold everywhere as this free ride into a good future where everybody creates green jobs and it's basically cost-free and all that. People are now sort of getting much more on the front foot. Barkindo, for example, and OPEC in general, saying the energy transition is not simply about replacing with one fuel with another, which makes me feel flattered because it's the same as saying it's not just about fuel substitution. Some of us have been preaching for a while. Voices in particular from Africa coming out very strongly saying we have X billion of barrels below the ground. We are not going to leave them there because we need the money. We only account for 3% of the global emissions. You can't let us drop by the wayside. So all of those who realize for good, honest, intellectual reasons that you can't drop out and away from fossil fuels tomorrow, that the world is a bit more complicated than that, and those who see their livelihood directly attacked, be they as company representatives or as countries which are poor enough, are more willing and have more analytical material to raise their voice. That's a debate which I will see getting stronger. And then third one, it's a bit hilarious, is there is this new belief in the Deus ex machina as the new savior being hydrogen and green hydrogen. I mean, it's amazing. Hydrogen was everywhere. And I give you a little story because it's funny. So I was on a panel debating someone, and it was supposed to be a panel with one of us saying hydrogen is the fuel of the future and the other one saying, no, it's not. None of us was willing to take the stand of hydrogen being the fuel of the future. So we said, we're not going to have this debate to the organizers. And my counterpart even went that far. He said, we don't want the lectures behind which we were supposed to stand. Give us some chairs, because it's not going to be a fight among us. We have no difference of opinion. They brought in the chairs. And then they went to the audience, as usual for these debates. They didn't change the format and had the public question, is hydrogen going to be the fuel of the future? The audience voted 70% yes. So we knew we would have a decent debate, but it was basically us against the audience. And we talked for an hour. And so both of us saying why we think it's not. And they had another poll for the audience. And this time 80% of the audience voted for hydrogen being the fuel of the future. So we duly felt a lot of egg on our faces. Everything that I said was completely in vain. The belief, and I think the willingness, if you're an oil and gas producer, to jump on something which promises you to use the same infrastructure, to use familiar processes, to use basically the same business models, was so overwhelming that I think good judgment got carried away a little bit. The world's not going to be saved tomorrow by hydrogen.
No, it is not. But what will happen next week, Jorge? That's perhaps something more of immediate value for us. We expect an announcement that the U.S. About the new Fed chairperson, if indeed there is a new one, or the reappointment of the existing one. Your thoughts on that and its relevance to, we're seeing the U.S. dollar be quite strong in recent months, and we're seeing now a divergence where the greater possibility of a U.S. interest rate hike is coming, the European is not, where that impacts the markets going forward and anything else you see in the coming week?
Well, I think the numbers are showing that there should be interest rate increases, not just in the US, but globally. It is kind of evident that in the US, there is more of a divide and a fight over whether you should do it or not do it. And there's a strong push by the Republicans against the Democrats regarding the deficits and the budgets. So I think the new chair or the existing chair will make noise, platitudes about increasing interest rates, but not really act. because this would be politically also very bad for the Biden administration. So while the narrative may be stronger in the US, the end result will be roughly the same. Not much action in terms of interest rate increases. But since it is more likely to happen in the US first, it is therefore natural that the US dollar would increase relative to other currencies. And this is what we have been seeing. By definition, this increases the cost of energy into the rest of the world because it's denominated in US dollars.
Yep.
But the reason we are having the propensity for higher interest rates is because production is increasing and demand is increasing. So it's a sign of a good thing. So I tend to look at those things that they're good rather than bad, right? So we should welcome that.
Yeah, it is a double-edged sword, perhaps. Let's get the survey result and give Christoph the last word this morning. The result tells us what? Everything looks fragile. Inflation trumps pay rise. COVID, I'm back. Okay, a little bit of a spread there. Nothing too representative of the world, but perhaps something indicative. Christoph, next week we're seeing a storm of US data releases. We've got the market PMIs for November out on Tuesday ahead of durable goods orders, the second reading of the GDP for the third quarter, et cetera, et cetera. A lot of data coming out of the US this week. What are you looking out for?
The inflation data and the employment data, of course, and we are, this time we can legitimately disagree, not in a happy situation where interest rates cuts will be ruled out, because they are caused not by things going very well, but by things having gone out of hand on the monetary side. So inflation is now 6% for this year. And if it continues to go up, voices in the US will become stronger and stronger to rein in. Biden, on the other hand, will be very tempted to make sure that the central bank is not turning too hawkish. And all this is the familiar breeding ground, for more uncertainty into the future. Because time and again, we have seen the Federal Reserve erring on the side of being peaceful, not to shock markets, just leads to bigger disruptions down the road. And I'm afraid from the policy side of I have no stakes in US policy, neither here nor there, but the first 100 days, I was quite impressed by the Biden administration, having sort of a couple of blueprints and seeming very willing to implement them one after another. But what I see lately just veers more and more into this opportunistic territory, which is not very healthy. So what we are now seeing is, yes, the dollar going up for very good reasons. An interesting trade would be to see that gold is also going up because inflation fears persist. And normally they move in opposite direction, even more than oil in the dollar. And so to come back to that issue, I think that the fourth question, which I didn't see, otherwise I voted for it on your survey, that everything looks fragile, probably will survive. So we'll get, unfortunately, more food over the winter, and more food, more support, and more people will feel that way. And it probably does, because the deficit finance infrastructure programs will probably again be oil in the fire. And this inflation problem then promises to be around much longer than it needs to be. And that's the point at which trouble really starts.
Yeah, it does seem to me, in wrapping up, that the fragility issue, everything seems to be at records. The record stock market index, the record price of metals, and even the record price of hotel rooms. I met with a client on the end of last week in Dubai, staying at the Ritz-Carlton standard room, over $2,000 for a standard room in the Ritz-Carlton at the DIFC in Dubai. I mean, these are numbers that are just, I don't know if they're temporary. They have to be temporary because they just can't last.
I think that's, if I may, that's a very, very good way to put it in observation. Everything is in a record, so what's next? And then you have the answer.
Yeah. Well, the last time that happened, 2008-9, but it does feel like the elastic band is being stretched. And yes, all the macro numbers are very positive, but as the New York Times headline says, why do I feel so miserable when I'm getting my pay rise? I don't know. It does seem like there's things to be concerned about. But we start the week with Brent just sitting below $80 a barrel. will it move in the coming days? We'll have to wait and see. Jorge, thank you as always. Really great to hear your thoughts and insights each month. Christoph, thank you very much. Enjoy that lovely view there in Abu Dhabi before you might have to go back to lockdown in Germany. Hopefully not. Maybe it might mean you have to stay around for a while. We'll see.
I will go to the UK.
Yeah, I'll go to the UK. There you go. Go to Texas, London, Texas.
Yeah, I would like to.
All right, guys. Have a great week. We'll catch up each morning, 10:30 UAE time. All the best.
Thank you very much. Bye-bye.
Cheers.
Thanks.